We're about to go through the fastest period of technological growth and adoption in all recorded human history in the next 5 to 10 years. And nobody is prepared for it. Humans are simple creatures. We think in linear terms. We can't understand exponentiality. It's just not something that suits our brain. Bitcoin starts the whole process, and then everybody realizes this business model of tokens, network effects, and all of the technological benefits work for almost everything. And that's the rise of NFTs, that's the rise of DeFi, that's the rise of social tokens, that's the rise of so much that's all going on so fast it's hard to keep up.
I would guess if you speak to most people in the public and say, is crypto bigger than the internet? Even investors, they probably say bigger than the internet. I mean, that's the biggest thing ever, the adoption of the internet, but it's not, right?
This is like a hypercharged new version of the internet. I don't know how big this is going to be, but it's a lot bigger than anybody thinks it is. When I was in the city back in the late 80s, we had something called the Big Bang, where investment banks and commercial banks were allowed to be the same thing again. This is that moment. There's another Big Bang, but it's the entire architecture of the financial system that's about to happen. They all know it's coming, and they're all working on it. This
is a whole different way of looking at things.
The computers are coming after your job. Understand that. Understand multiple streams of income. Embrace this new future, crypto, stuff like this. There is an opportunity here.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Raoul Pal, the British educator, investment strategist, broadcaster, and entrepreneur. In 1997, you became the head of European hedge fund sales at Goldman Sachs before becoming a portfolio manager at GLG Partners, one of the largest hedge funds in the world. Then, in 2005, at the age of 36, you left the world of mainstream finance to start Global Macro Investor, your own advisory publication. You first got involved in cryptocurrency by investing in Bitcoin in 2012, calling it, quote, the best trade you've ever found, and doubling your money in a month. In 2014, you co-founded the financial analysis streaming network Real Vision with the aim to, quote, disrupt the whole damn system and change the face of financial media. Raoul, welcome to London Real.
Great to be here.
Hey, it's great to have you here. You know, it's going to be a fantastic conversation. I can't wait to jump into a bunch of your ideas. We both have a background in centralized finance and in banking, so I think it's going to be really interesting. I started banking in New York City back in the 90s in fixed income derivatives. I went to Chicago, I went to London, and was in the credit default market for a while. But 10 years ago, I got jaded. I started broadcasting London Real, but we weren't just doing finance, we were doing all sorts of different things. But funny enough, Raoul, we dipped our toes into crypto over the years because it was current. So I had Max Kaiser here back in 2013 screaming at the top of his lungs. I had Andreas Antonopoulos here in 2015. Then he came back in 17. Then he came back in 19, Raoul. And he was talking about the internet of money, the future, you know, but we couldn't see it happening yet. So it was kind of weird. You know, he was talking about it, but it wasn't there yet. Then last year, we got really busy fighting for freedom of speech, went head to head with YouTube. This year, we ran to be mayor of London. And then after all that was over, I looked at the DeFi space and I was like, what is going on here? I've never seen this rate of innovation, this rate of adoption. And again, I was in the .com startup in New York City as a CFO. And I was like, I gotta be involved in this. There's something special happening here. And so we just decided to go all in. I started the DeFi Academy. We got hundreds of students going through and just trying to get involved in this market. I find it super exciting. And I want to get your thoughts on it. Your video from back in April 30th of this year called Raoul Pal's Introduction to the Exponential Age, it's got over 1 million views. And I encourage everybody to watch it because, Raoul, I think you were channeling some kind of higher energy on that day. I mean, like, I don't know, but for 90 minutes, you were flowing and you were dropping some terms I'd never heard before. Things like pristine collateral, being irresponsibly long, crypto being call options on the future. And maybe we start with you talking about this exponential age because, Raoul, you felt almost like you had surprised yourself. Like you already knew this market was big, but it felt to me like you were saying, wow, this is maybe even bigger than I thought it was. So tell me, first of all, am I wrong on some of those observations of you? And maybe you can walk us through this concept of the exponential age.
Yeah, this whole thing, the more time I spend on it, the whole crypto space, and the same is happening with technology at the same time, which is what the exponential age thesis is built on, is like, we're about to go through the fastest period of technological growth and adoption in all recorded human history in the next 5 to 10 years. And nobody is prepared for it. Humans are simple creatures. We think in linear terms. We can't understand exponentiality. It's just not something that suits our brains. But let me explain what's going on in crypto, because that's our focus for today a lot, is the internet between 1990 and 2000 grew at it. That's the fastest period of growth for the internet because it went from zero or, from low numbers to larger numbers. That period, the internet grew at 63% a year. It was the fastest adoption of any technology in all recorded human history, much faster than the mobile phone that came before it and the telephone became before it. These are network businesses, and I'll come on to that in a bit because it's a really important concept. So, okay, how's crypto doing? Crypto's growing at 113% a year. It's the same number of users as the internet had in 97, just before you decided to leave the world of finance and jump headfirst into it. People told you, oh my God, the dot-com crash, it was a disaster. Well, it wasn't, because out of that came Facebook, Amazon, Google. I mean, you name it. It was the start. It wasn't the end. So we're growing at 113% a year. So this is double the fastest adoption of any technology in all recorded history. Okay, that is exponential growth. So we're at about 140 million users as of today of crypto worldwide. If you lower the rate of growth to 83%, to be slightly conservative, you're at 1 billion people by 2024. That's 3 years. It's like, okay, I can't get my head around this, but that's how fast it's growing. And it gets you to about 3.5 billion by about 2027. So basically, you're going to get to half of the world by the end of this decade. So that is truly extraordinary. What is that? What is this adoption? The adoption is a network of money and all of finance. In fact, it's a network of value that sits above the internet, that connects all of this digital world into a way that the value is transferable, storable, ownable, recordable. And we'll get onto a lot of this stuff later, but this is the world of everything from Bitcoin, which was really clever. Why Bitcoin was a big breakthrough was because we've developed a new business model that mobile phones have brought and stuff like that. These are network models. It was, in fact, a guy called Metcalfe, Metcalfe's law, which is you value a network according to the number of users and the kind of interconnectedness they have with each other. And that was mobile phone companies. If you had all of the mobile phone networks in the world added together, right, you got a multiple trillion-dollar business. We just don't think of it that way because it's fragmented. Then you had the network business models of Facebook, where they started, and Google and Twitter and Reddit and you name it. They started using behavioral economics combined with this data and creating a network of people that were incentivized to post more, share more, like more, do things more. Now, for us as users of those networks, we got the benefit of finding our old school friends and keeping contact with your cousin and all the stuff that we use social networks for. The shareholders got rich. We didn't. In fact, they took the economics from us. They monetized our eyeballs and our attention. Then comes Bitcoin in 2008. So, and you've got something super powerful, because what you've got is a network where the users of the network have Bitcoin. The value of the network is Bitcoin. So it becomes a network like no other, with all behavioral incentives aligned, where everybody is incentivized to grow the network. This is why it grows so fast. So Bitcoin starts the whole process, and then everybody realizes this business model of tokens, network effects, and all of the technological benefits work for almost everything. And that's the rise of NFTs, that's the rise of DeFi, that's the rise of social tokens, that's the rise of so much that's all going on so fast it's hard to keep up with. So that was a long answer to your short question.
Yeah, and it's funny because right before I sat down here, I wrote myself a question to ask you, is this bigger than the internet? And funny enough, you answered it without me even asking you, but I would guess if you speak to most people in the public and say, is crypto bigger than the internet? Even investors, they probably say bigger than the internet. I mean, that's the biggest thing ever, the adoption of the internet, but it's not, right?
Is it bigger than the internet? No, not in terms, I don't know. They're really the same thing. This is like a hypercharged new version of the internet. But if you think about as investors, the internet was something that you had to make the right bet. Was it going to be Oracle? Was it going to be Juniper? Who was the right player? How did you make the money? It wasn't as easy. This is actually pretty easy in many respects because you've got Bitcoin, which is a monetary network. You've got Ethereum, which is basically a platform for all of this. And then you've got a bunch of other things that you can invest in. But the whole space is moving in size, and it's much easier investable than, let's say, the NASDAQ was in the past. You didn't quite capture the value of the internet because this is global. When you bought, Juniper Networks back in 2000, that was a US firm. Yes, it was global, but you weren't capturing the global value of the internet. You had to go and buy a share in all of the internet firms. Here, one thing fits all, and it is amazing. And I don't know how big this is going to be, but it's a lot bigger than anybody thinks it is. Literally anybody.
And it'll be the biggest thing in the past 100 years and maybe the next 100 years. This point in time for the next 10 years, like you're saying, as we go up to maybe 3.5 billion, probably you can conservatively say that it'll be the biggest, most exponentially growing thing we'll ever see.
And that is happening at the same time as AI goes mainstream exponentially, robotics goes mainstream exponentially, autonomous vehicles, EV technology, genetic sciences, distributed computing power, all of these things, 5G technology or space Wi-Fi, are all happening at the same time. And they all are connected. And they're all driven by networks. So it's kind of hold on to your hat. Humanity's not dealt with anything like this before, and it's not going to be easy. You see it all over social media. There's a fear of the future from some, because their value system's changing. It was gold and value investing. It was bonds. And it was, that's what I know and that's what I'm comfortable with. Somebody's telling me this internet money is the future of everything. I don't want to know, and then it becomes anger and resentment. And I don't think that's going to go away for a while. I think people are going to be this is going to be very unsettling, this whole period, but incredibly rewarding.
Yeah. I mean, you have a background in centralized finance. You worked in a bank. I worked in a bank. And, maybe we just talk about this right now. I mean, I got a text message from NatWest last week that said, to protect you and your money, we're going to restrict you from being allowed credit and debit payments to Binance. And I thought, well, that's very nice of you. You've never sent me a text like that in the past. And that was an interesting reaction to a centralized financial institution to this world of DeFi. What do you see the banks doing? I'm sure you still know lots of people inside the banking world. Do you see them as just part of the innovator's dilemma? This is something that always happens in disruption. Do you think they're going to hold on much longer because they're kind of ingrained in the whole government and financial system? Do you look at them as the bad guy, the good guy, or is this just a process?
There's a lot at stake.
A lot.
A lot at stake.
Yeah.
I don't think NatWest, having worked there in the past, they're not brave enough to make this decision. What they're terrified of is the regulator coming after them. They have no They're not thinking yet of Binance as a competitor. We need to stop them. So I don't think that's happening. I think what is happening is the regulators are far behind. We know they want to regulate, but we don't know how. And nobody wants retroactive fines. All the banks are fed up with that because they've been paying fines since 2008. And that hasn't stopped. So they're terrified. The regulators are terrified because there is a lot at stake. Because suddenly there is a decentralized financial system that is probably broader than finance alone. It's the value of money, the value, it's the internet of value. And they don't know what to do. How on earth do you regulate it when you have things like DAOs and decentralized exchanges that don't exist? What do? All you can regulate is your on-ramps and off-ramps. So they need to figure that out fast. And the central bank digital currencies is their answer to this, because then you know what connects with what. Right now, if not, it's too difficult for them. So everybody's scared. The regulators know where the world is going, I believe. I don't think they're stupid, and I don't think they're going to stop it. I think they just want to slow it down so they get a chance. Because what are governments actually interested in? They're interested in taxes. And that's even what KYC AML is about too. It's really just tax collection. You know, a smaller black market economy, bigger tax collection. And having just gone through this period of excessive government spending over the pandemic and beforehand for the last decade and a bit, they need to raise taxes. So they just want it within their web. They don't want to lose the power of currency themselves, which is what the central bank digital currency is doing, is trying to stop them losing currency, but they're probably going to have to share it, and they're going to have to share power. And this world is going to evolve outside of their sphere of influence, and there's not a lot they can do about it. So I think there is the dilemma is everybody knows they're being disrupted, including the BIS, the IMF, the ECB, all of the central banks, all of the main governments. They're not stupid. And they don't really know what to do. There is a sense of arrogance, which all of us in the crypto markets sees as their sign of weakness, is the arrogance, is the non-acceptance of what is really going on. And that usually means they'll probably move too late, because they're still trying to regulate, the simple things like exchanges. Meanwhile, DeFi's exploded. And then they get onto DeFi in 4 years' time, and NFTs are now the biggest thing in the world. There's no way they can deal with this pace of innovation. The sheer number of people at an entrepreneurial level that are involved in this is like nothing I've ever seen before. It's more than I saw with the internet. It's huge. Now, to go back to the question about, okay, what are my colleagues in the investment banking world? Well, that's entirely different. The investment banks smell money, and they want to control the flow of it. Not in terms of centralizing money, but there's money to be made from their customers who want access to it. So they too are scared of the regulators, but they're pushing forward faster. So Goldman has trading and derivatives in this stuff, JP Morgan, everything else. And they're all moving this way because they know it's coming. They also know in the end, and the regulators know, that everything is about to be tokenized, the entire industry, because you get T0 settlement, instantaneous settlement of any transaction for any financial instrument in the world if you tokenize it. Question is what blockchain does it go on? And the answer is it's not going to be a centralized blockchain, because they can't innovate fast enough, because nobody can hire enough developers. So it's going to go to the private sector. Like we saw the European Investment Bank launched a bond on Ethereum to test. So there is this world. We don't know what it's going to look like, but it's like when I was in the city back in the late 80s, we had something called the Big Bang, where investment banks and commercial banks were allowed to be the same thing again. And this is that moment. There's another Big Bang, but it's the entire architecture of the financial system that's about to happen. They all know it's coming, and they're all working on it.
Yeah, and like you said, if the customers keep calling, and if they want the exposure, your best banker at Goldman and JP Morgan, I mean, they're going to find a way to get them access. They're going to find a way to do it. They're going to find a way to make money. But then there's this whole issue of regulation. Do you think that there will be a point where a government, whether the US government or Bank of England or someone else, is able to slow down the pace of growth, to just pull a massive restriction? Or do you think that this really is unstoppable, that it won't be able to pull it back 30%?
Well, China's kind of doing it now, until they get their stuff sorted out with their central bank digital currency. Again, I don't think their intent is to get rid of Bitcoin. It's to clean it up. They've got wild speculation going on. They've got a problem with their private sector shadow lending markets anyway, and crypto's being used for it. Also, they've got a problem with money going offshore. So they're just trying to just say, right, stop everybody. We want to get this organized so we can deal with it. I think we will see that periodically. We haven't seen it in DeFi, but that's coming. Because there's no disclosure of risks and stuff like that. Now, the question is, I saw Gary Gensler yesterday, the new head of the SEC, talking about risk. And I'm struggling to see why. We understand there's a lot of scams in the space and things there needs to be a hurdle. But why should somebody restrict somebody from the opportunity to make money? In the US, you have this term accredited investor. So I'm an accredited investor. So I get to do anything I want to make as much money as I want and lose as much money as I want. But somebody else is not allowed to. So you're perpetuating the 99% versus the 1%, even though you're trying to do the right thing. We need to change this. Now, we've seen some of the rules on crowdfunding change. We've seen some of the rules on who can invest in startups. Most cryptocurrencies are basically real-time mark-to-market venture capital bets. We just need to teach people how to take risk, not stop them taking risk. And humans are gamblers. If they want to gamble, they will gamble. They'll gamble on the horses, they'll gamble on the football, they'll gamble on anything. So if you think that by regulating who can invest in cryptocurrencies, you're not going to stop gambling, you're going to stop gambling in crypto, they'll just go somewhere else. It's ludicrous. So they need a better understanding, really, of what is going on. And it's hard because it's engaging young people at scale.
Yeah, it's a fascinating observation, and you can see it in the volatility. You can see it in the people involved in this market. Like you said, they're getting access to risk that used to be held for accredited investors. But why was it held for accredited investors? And that's one thing I see that you're doing, Raoul. You're so passionate about the financial education. And I think you once said Bitcoin is the best chance for the median person to radically expand their economic horizons. And it's an interesting concept. Just by trading crypto, you learn more about money, or you get more comfortable about money than probably you ever have in your life. And we're taught from kids that you're not smart enough to manage your money. That's what the fund managers do. That's what these people do. And this is a way to have a real relationship with your money in a way where a conspiracy theorist would say, okay, the governments and the banks don't want you to. But regardless of the motivations, it's been something that's been missing in the past. But crypto changes all of that, right?
It really does. And also think about it. I try and think of the world in different people's eyes. And let's say you're the typical millennial kid who's now 32 years old, I think the average age. So you're just starting to come into peak earnings. You've got no savings. You've still got your student debt you're trying to get rid of. And then you look at real estate. So look at traditional investments. So what are investments? Investments are basically future consumption. You buy something now, you hope to sell it at a higher price to give you consumption in the future, right? When you retire or whenever it is, right? That's what an asset is to us in the investment world. So what assets do they have? They have the equity market, all-time record high valuations. They have the bond market, all-time record high valuations. They have the real estate market, all-time record high valuations. So traditional assets to them, they're buying very expensively. Now, if you look at the size of those markets, equities, bonds, and real estate on a global basis, like global real estate's about $100 trillion. Global equities, global bonds, they're all like the $200 trillion market. And then you've got crypto, the fastest adoption technology in all recorded history, which is the internet of money, where all of these things are going to be tokenized and will be part of this. It won't all be Bitcoin. Bitcoin's just one of the expressions of this. So that space is currently about $1.5 trillion today. So for it to meet somewhere around the equity bond market size, that's 100x from here. If it actually absorbs all of those markets, well, that's a 500x. So 100x, you, me, Nobody in history, anybody has ever been given a whole asset class, an entire asset class that can go up 100x to $200 trillion. So, and it fractionalizes. So it doesn't matter whether you earn £20,000 a year or you earn £200,000 a year, you can both put 10% of your income in it because it's fractional. So now you're on the same playing field. Okay, that gets interesting. So we can all have the same percentage in Bitcoin, but then it's going to get more interesting because, like, if you've got an apartment in number 1 Hyde Park, that thing costs £200 million out of all of our reach. But the guy who owns it probably bought it for 100 million. He's made 100%. He's made 100 million. But we can't. And the average apartment in the outskirts of London hasn't gone up as much. So how do we make the money? Well, we're going to tokenize real estate too. Because then maybe out of one of those fancy buildings, one of those apartments gets tokenized. So you can put in 10% of your net worth into it, and I can put in 5% of my net worth, and somebody else can put in 50% of their net worth. And because it's fractional and it's tokenized, we all get to participate without it just being the rich get richer. Fascinating. So there's a lot coming.
And so those millennials are looking, even if they don't have a financial background, they're looking at, like you said, these other asset classes, and they all seem at their peak. And then they see something that potentially could grow 100x to 500x, and they have access to it.
and it's native on social media. There is crowdsourcing of information, the quality of information that's out there. Yes, there's a lot of noise, but the quality of information, the people who are trying to help in this space on Twitter, on Reddit, and all of these forums is extraordinary, even on TikTok. So people are trying to help you because of network effects. Means if you bring more people into the network, it goes up in value. And also people passionately believe in the point of this thing. So it is engaging young people because also all of those millennials grew up in 9/11, 2008, and now the pandemic. They have no trust in institutions. They trust institutions implicitly in some ways, but finance is the big one that they don't, because their parents lost their houses and jobs. And so when you're seeing an opportunity that is social media in nature, that's native to the internet, that they understand and live in, that offers them huge potential reward, and they can stick it to the man, well, kind of gets interesting.
Right. And then that's probably why you see this exponential option on the back of it. And the way you kind of opened this broadcast out with that incredible explanation where, yeah, you had Facebook and you had this whole information layer here, but you never had the value layer, and you never had a value layer that was peer-to-peer and controlled by that peer group, which then leads to the adoption and the growth. And it's an incredible way of visualizing what's happening here. And I worry I'm in a bubble here, Raoul, that I keep talking to people like you and Michael Saylor and, CEOs of Aave and Charles Hoskinson, and everyone's telling me this, but when you say it, it just seems so clear to me.
Well, I go and have to head check myself, right? Because we're all in this space, we can get each other fired up. But I just use that adoption curve, right? If networks are valued in a certain way, then let's just go back to first principles. Okay, how is this network growing? What is going to derail that? Is bad news about Tether going to derail that? Highly unlikely. Is regulation going to slow it down? Well, I think regulation speeds up adoption, because then NatWest won't be saying, oh, don't use Binance. They're like, okay, fine, you do what you want. Here's the rules. So it's very difficult to find a world where adoption goes down. And at this pace of adoption, it feels very difficult indeed. So I just try and to first principles, keep out of all of this, because everything sounds amazing. And we don't know what's going to go to zero and what's going to go exponential. But generally, it's that network adoption model. That's the truth.
Yeah, that's such a great point and a great way to ground yourself whenever you feel like you're in the echo chamber. Go back to the first principles and just look at the order, look at that growth and say, okay, I can't argue against this at all.
And the other easy one for people who don't really know how to do that is, there's free charting platforms like TradingView. You can just chart a log chart. All exponential assets basically look like a beautiful trend channel in a log chart. So Facebook looks like this, Google looks like this, Apple looks like this. Well, actually, when you create in the log chart, that is lovely linear trend, log trend, and Bitcoin is the same. And if that changes, that log trend from 2010 till current day, if that changes, then you can reassess. If not, the ups and downs, the noise, all of the screaming and shouting on social media, forget about it. Just follow that chart.
Right. Okay. And that's that logarithmic graph that you're looking at with the log chart. I encourage everyone to look at that. One of the things you talked about in this black hole video was Ethereum versus Bitcoin. And again, it was fascinating to watch you almost realizing this while you were saying it and showing it. And you were looking at, again, you talked about Metcalfe's law. You talked about all these data points and what Ethereum brought to the table and how you were just more and more convinced that this quote unquote flippening would happen, or Ethereum would long-term surpass Bitcoin, or at least there was massive value in this network. And maybe you can talk a little bit about that. I've been rewatching my interviews with Andreas Antonopoulos from 2015, 17, and 19. He's basically describing Ethereum before Ethereum really had the traction. And he's describing this whole potential future of smart contracts and these things, but it hadn't really happened yet. And then we see it happen. Tell me what you were describing in that video and what you see and your thoughts on BTC versus ETH.
So it started, I've been involved in Bitcoin's first 2012, 13, and I get the value proposition. I get what it is. It's perfection as an asset and its store of value. And yes, it's still too volatile to be a store of value, but it's compensated by the fact it goes up a lot. So, we don't mind. We have to accept the volatility. But then, I was starting to become aware of smart contracts in about 2015 as some friends of mine started talking about it. And I didn't really understand what that was, but when they explained, I started realizing the future of everything from insurance contracts to legal documents to anything could now go on a blockchain. And that meant for me also with my finance background, okay, that means all derivative contracts, which are complicated and messy. And we knew it when Lehman blew up, nobody knows who owns what. So I'm thinking, wow, okay, that's all of finance. Probably there's custody and there's clearing and these are a lot of things. And so I reinvested in the space. I sold out in 2017, too early. I then bought again in 2020 because the macro and crypto come to this point where it was like marriage made in heaven. The chart pattern was perfect. The government's going to print massive amounts of money. The financial system is going to be under massive strain, and Bitcoin is going to come this shining light. And that's exactly how it played out. So I was heavily invested, in fact, 100% of my liquid net worth in this, which is why irresponsibly long was the terminology. Although I didn't use leverage, so it wasn't that irresponsible. And I've got income and other stuff. But anyway, so there was
That's quite a lot. You're all in. You really are all in.
I'm all in. And then I started looking at the chart because I love a chart of Ethereum versus Bitcoin. And I'm thinking, this looks like it's basing. This looks like it's going to break out. And this is how I do a lot of my macro thinking. I start with a chart, think, why is it telling me that? So then I start doing work about, okay, well, we kind of think we know how to value Bitcoin because we're using this stock to flow model that Plan B has, and we're doing all this stuff. Maybe it's something else too. Maybe it's network effects. So I start talking to people, thinking it through, and I start looking at Bitcoin in network effect terms, and it works. Metcalfe's law. So I thought, I wonder if Ethereum works, because everyone tells me, oh, well, you don't want to touch Ethereum. It's a scam. It's a shitcoin. It's going to underperform. I'm like, once you tell me something like that, I'm going to look at it. If it's something serious. So I did the work, and it's like, not only is it getting faster adoption than Bitcoin, it's working perfectly in terms of price with Metcalfe's law, and it is almost mirroring Bitcoin back in 2017 with the kind of lag by the number of years, except the network's going faster. Then I looked at the quality of the network, like the amount of connections. And you see that people on Ethereum have built all of these applications, which is all of DeFi, all of NFTs, other uses of smart contracts. We've got central banks using it for the European Investment Bank, putting bonds onto it. We've got people wrapping Bitcoin on it. People are wrapping securities on it. And you're like, okay, this is the platform for now. Things can change. Its adoption is twice the speed of Bitcoin. just to get everybody's heads around it. I mean, so the probability of Ethereum going up dramatically in price because of that alone is very high. Then cut to tomorrow. So after this interview, once everybody sees it, we'll have implemented EIP 1559. What that basically does is Ethereum got quite expensive to use because gas fees. Well, what they're going to do with fees is they're going to start burning Ethereum, which is basically like a share buyback, which makes it rarer. So the issuance rate probably goes from 4% a year to, we don't know, but let's say 2%. Okay. And then we've got another thing coming in Ethereum, which is ETH 2.0, which is moving to proof of stake. And what's very nice about that is we all get rewarded by staking our ETH. So we get through this 1559, probably everybody ends up staking the ETH because the price is going to start rising. And so everyone locks away. So there's a bunch of Ethereum get locked away. There's a bunch of us who are also holders who've stuck it in our cold wallets. And then there's all of DeFi, which is locking away billions and billions, tens of billions of dollars of Ethereum. So when you look at the analysis, the on-chain analysis, the free float of Ethereum going into this is 13%, and it's falling every day. And as the price starts rallying, which is doing pretty well, and starts approaching the new highs again, A, everybody's going to stake their ETH because why not? B, if not, you're not going to keep it on exchange because it's going up in value, so you tend to put it in a cold storage. And so there's no supply, and you're burning ETH every day. So the supply keeps going down, and the network effect that I've been talking about means that the demand is going up exponentially. So a limited supply asset that is becoming more limited with a backdrop of exponential increasing demand can only equal exponential price rises.
And your view on this hasn't wavered much in the past, say, 6 months?
Not at all. Not at all.
Right. And yeah. And with this latest initiative as well, it just, like you said, gives even more and more reasons. And some of the complaints about Ethereum, about it being inflationary, it addresses all of those. And like you said, with the stake, we've never really seen that effect happen, and it could be big.
I wrote this up for Global Macro Investor, my kind of institutional research service, and I just titled it "The Greatest Trade in the World." And I think the opportunity in ETH is better than the opportunity in Bitcoin in March 2020.
Wow. That being said, you still own Bitcoin?
Yes.
Okay. You still have it as part of that portfolio.
Correct. But it's a lesser part.
You're most heavily weighted Ethereum.
Yeah, I think 55% ETH, 25% Bitcoin. Then I've got a basket of everything from DeFi protocols to other big protocols like Polkadot, interoperability stuff, equally weighted because I don't really know. And I'm just not smart enough to figure it all out. And then I got a bit of a macro bet in Metaverse and community tokens. But again, small. Everything's really an Ethereum Bitcoin bet for me still.
Okay. Look, while we're here now, let's talk about a couple of those things you mentioned. And the only thing that maybe we can see competing, if you will, with Ethereum. Obviously, Cardano's the big wild card, making some moves in the next couple months. We got Charles here, I think, about 4 weeks from today. We've got, like you said, DOT. It's a lot of these kind of interchain pieces. We've got these second layer solutions like Polygon. But if you look at CoinMarketCap, there's not a lot of other things happening except for DeFi protocols up there that I can see. There's some great apps, Uniswap and Aave and things like that. What do you see in those other competitors, if you will?
I don't, and I don't know is the answer. But I need to have an open mind because this space is too close-minded. The space is because you're rewarded to be tribal and back the only one true thing, true asset. As investors, we need to be careful of that bias. So I don't know. So some very smart people that I know say, listen, Polkadot is a really serious project and this could do this, Filecoin or there's a bunch of things that people say, listen, you don't really understand the use case yet. And probably in 3 years' time, we'll be talking more about it. So I kind of So yeah, okay, I'll keep an open mind. I have an open enough mind that I even own Doge. And the reason being is, simply put, if the world is network effects, you've got a lot of retail owners, but there's no network because we're not being used. But then you've got Elon Musk telling you, hey, I want to build on this. Why? Well, because he's got all these users, right? He can now raise infinite capital if he becomes, the core side, the other side of the network equation. Mark Cuban started accepting Doge because he realized it's a social thing. People know it's kind of fun, but it also has worked. So he started accepting at Dallas Maps for ticket sales and merch and stuff like that. So now you might end up building a network. So again, I keep an open mind to all of this. People are too quick to say, this is never going to make it. Like Cardano, right? There's a huge fight in the community, Cardano and its smart contracts. And, is it going to amount to anything? Is it going to amount to nothing? I don't know. And that's okay. And we should all be a little bit more comfortable saying, I don't know. It's pretty interesting. Let's see how it goes. I can place a small bet in it. I can't place a big bet yet because I don't know enough. Maybe you're really in the space and you know it inside out. And you think, yeah, you know what? I can see what's coming down the pipe on the plan. I think this is going to work. I can take a bigger bet. That's okay too. But, I can't because I don't know. I just don't have the bandwidth to take all this in.
Yeah, that is the thing, is bandwidth. I mean, one of the things I'm getting all my students to do is we have a thing called a 10 coin rule. You're not allowed to own more than 10 coins, at least for your first year of investing. That's probably too many because there's so many stories, there's so many rabbit holes, but there's also, it seems like a finite number of potential players. And like you said with Cardano, it's interesting because it's been a long time in the works. It's a long-term plan, but it's a call option on something that could be big. And there's not many places that are putting that much effort into that piece. So I guess it's a kind of watch and to be continued.
Yeah, I mean, there's the other one that came out that it's going to take a while to sort this one out. And I don't know which way it's going to go, but you shouldn't write it off, is dfinity, or the internet computer. So unfortunately, it was backed heavily by VCs early on. The people who were allowed liquidity on launch had made tens of thousands of %. And so retail got pretty burnt into that equation. That was ugly and not good and not honorable. I've got several friends who invested in it and they're all locked up still, but there's a bunch that weren't. So that was not good. What those guys have built, I don't even understand. I can't, I've interviewed them. I don't really know, but I kind of figure it's big. It's kind of like, when we first spoke to Charles Hoskinson on Real Vision 2016, 15, it was the same. It's like, it sounds pretty big. I don't know. And dfinity's, it fell 90 something %. Is that a small call option on something? Could it be worth zero possibly? I don't know. We just have to keep our eye because, even though the adoption is exponential, each token has to go through its adoption curve or failure. And we don't, that takes a bit more time than we think. While we see the whole space doing this, it's really driven by Bitcoin, Ethereum, and DeFi. The other protocols, it's going to take more time.
Yeah. And it's interesting how I like how you are honest enough to say, I don't know exactly what they're doing, but all great tech investors from the past never really knew what the company was doing. I mean, did anybody really know what Facebook or Google were doing in the beginning? They knew. They probably passed the first principles. Oh, you're doing this. Listen to Peter Thiel. It's a social network. They're using their real names. I'm in. There's little things, but there's a lot you'll never know. And if you try to figure it all out, it's too late usually. So I like how you're thinking of these markets as it might have the potential. Let's keep a small bit, but keep the core positions. I want to talk to you about the metaverse and your community IP, because this makes you very unique, Raoul. You really have a passionate way of understanding and looking at the communities, which I think you believe is everything really going forward, and how the future is these communities. You've touched on it while we've been talking now. You mentioned Doge, you mentioned kind of the Facebook, but then the value over here. You mentioned since it's peer-to-peer and people own it, you mentioned some of the passion behind some of these coins. Talk to me about community. It's such a general word. I don't know if anyone understands it. If you've had a community, you kind of understand it, but it also slips through your fingers too, doesn't it? Because
It does. What did the internet do for you and I? We would have grown up in a town where we knew a lot of the people, and then you go to...
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.